Welcome, and today's guest is John Matheson. John is the CEO of Commercial Loan Success, CLS, which is a software and education platform for property investors and business owners from Hartford, Connecticut, way out from the East Coast. Welcome, John.
Welcome. Thank you.
So, appreciate you taking the time to jump on the call here, and I'm excited about the software that you have developed. I know that you are a property manager, or you manage and develop properties with J. Healy Development, and so I can imagine with that experience that you have and the software development side of things, that this software that you have is really it's sort of the cat's meow, we might say, when coming to vetting deals. Could you just describe it a bit?
Sure. So, it's funny when you get into discussions about being a real estate developer and then also a software developer. And probably, as you guys can all see from the gray, so this has been a 30-year run, the majority of which was property development. So that elevator script was easy. I'm a sustainable builder. We do this and that. And, people, when you get it to our age, as the numbers are high. You start adding up the tens and hundreds of millions of dollars of deals you've been in, and you just start laughing because it seems like a lot, but it's over 30 years. So it's been a heck of a run. But then in the software space, it's a different type of discussion. So what do you say? What's your new elevator script? So my wife has the best one. She says he's a real estate developer and a software developer. So he's out of my hair all day.
And that's a good thing sometimes, right?
Right. And then, so, what happens when you're doing what we do is we're always looking for, and especially at our age, we need to stay relevant. Everybody else coming along is into the tech tools. You remember the deals when we all did our first contracts and they were on the white and the yellow and the pink copy. And I tell my kids, signed, sealed, delivered meant something, because it really was. You took the paper, you pulled it off, and you had to seal an envelope and deliver it to somebody or they didn't get it. Now I sit here with my properties and these people text in offers, and I look at the text and I'm like, you're kidding me. Do business in person. We're not going to text in at these size deals, but that's what they do. So you're always looking for new tools to help you out. So when you talk about how did I get into the commercial loan software, like any of us, when you're in this business long enough, you survive recessions. And you and I have been in through 3 real ones that we've gone through in our career. And the last one was no fun. And we certainly all learned how to survive, but I don't want to come back on your show and talk about skill sets to survive the next recession. We want to keep this nice little thing we have going. But I needed, like everybody in development space, I needed a commercial loan on a transaction. It doesn't matter if it's a small one or a bigger one. We all start out small, and then we learn how to use commercial bank and private capital money to get bigger. So, and as you start to level up, you start to realize in earnest, I have to learn how to use that banker side. So when we all start out, it's regular commercial lending. And as we get bigger, we'll get into Fannie Mae and FHA and that kind of stuff. But when you look at what you have for your traditional bank relationship and you want to grow it, you say, well, what are the tools that I have available to do it? And all of us would sit there and I think I can just about relate to everyone in the audience who would say the commercial bank process on any transaction is somewhere between the unknown and nervous, right? All the way to dread when we go into it, right? So picture me, same as everybody else, post-recession, trying to fund a transaction and, finding out my current banking institution just didn't have an appetite for any more cash flowing real estate deals. Sounds weird, but that's what you remember. That's the way it was. So I'm out there and I get referred to a guy who comes from a commercial realtor who is going to help me solve a real funding issue that I had. So I meet him in a diner. And he says to me, bring your pro formas, bring your income and expenses, and I'll see if I can help you. So I meet him in a diner. Now at our age, we shouldn't be in a diner. Right? We're sitting there in the sausage and the bacon and the eggs. And there we sit, and he's got his laptop. And he says, all right, John, what are your numbers? It was actually a pre-construction deal, so it was pro forma. He says, what are your numbers? So I'm giving him what I had, and he's tapping them into this computer. And I'm facing him and his laptop is facing me. And he's tapping in, and I said, what are you doing? He goes, hang on, I'm entering your numbers in my software. So then he's done in like 2 minutes. And he turns it around, and he's got this great big green go on the screen.
Wow.
And I said, go, what does that mean? And he goes, well, I vetted your transaction against common commercial bank guidelines. And it says you're likely a go to a commercial bank application. So what I'll do now is I'll download, print, and share the printout from this with my lenders. And in a couple of days, you'll have an LOI, and then you'll close your deal. And that's exactly what happened. But I'm sitting there before that happens, and I'm looking at him. And Tom, I'm saying to myself, I've got an acute need. I really need to fund this deal. But what does he have there is more interesting to me than my transaction all of a sudden. What did he just put me into? So I asked.
And all the work you put into getting it to that point, and he can so quickly give you that indication that I can imagine that.
Right. And I'm a property developer at that point with 25 years of experience, and you're sitting there and you have no problem normally funding deals, but the market was stranger then. So you're sitting there trying to get a bank to do your transaction. So here we go. So he says to me, well, I vetted it using, I put you into my software. I said, what do you mean your software? And he goes, yeah, I've been a consultant in the banking industry for over 30 years. And I wrote this code to be able to vet deals. And I vetted over billions of dollars of property transactions and business credit lines using this software and placed it for funding. And I'm looking at him. And I said to him, so I'm trying to think now, how do I get this software? I want this, right? So I said, well, how do I get this? I'd like to put this on my computer. He goes, oh, well, no, it's mine. I can't give it to you. I have no way to give it to you. It's on my computer. I can't, And I said to him, have you ever thought, and my brain is changing now, and the entrepreneur is taking over, right? And I'm like, you just resolved a ton of angst for me by telling me this sitting here. Do you realize, have you thought about how many people nationwide are in the same boat I am, who are feeling the same way? And he goes, oh yeah, I get that all the time from people. People hug me over this. I said, have you thought about nationwide distribution? He says, oh yeah, I really have. I've just been so busy in my consultancy. I just haven't gotten it. I haven't gotten it into the cloud. And I said, well, would you like some help with that? And he thought about it for a minute, and he said, sure. And that's how our partnership started. And that's Dan Crowley, who's my partner, the commercial banker who actually wrote the code for the software that allows all of us now in property developer or business space to simply enter our numbers in a couple of minutes. It takes us to enter our numbers, and we can then know if our transaction is likely to go to an application at a commercial bank or if we'll be stopped, and it'll tell us why we're stopped and what corrective action we need to take.
Wow. So right before we got on this call, before we started the recording, you and I were talking about the 2 or 3 biggest challenges that investors have, or challenges that we would warn our listeners about. And the 3, as I recall them, one was the understanding and really knowing and planning what the exit will be. That was one. Another one was being underfunded. And the third one was looking at projects through what we call rose-colored glasses, just seeing all the upside, but not really understanding the potential downsides. So with those 3 things in mind, can you describe and share how this software, this program, can help out with those 3 challenges that most any investor, new or seasoned investor, runs into?
Fantastic. When Dan wrote the code for commercial loan success software, one of the things he said to me was that all of us in property development or investor space can take solace in one mantra. And the mantra is, if it's a good deal for the bank, it's a great deal for you. So when I look at a property as a passive or active investor, or anybody listening today who would use the software, it's a sanity check. It allows you to put in the numbers and very quickly determine if the opportunity you're being offered is something that a commercial bank would do. And if a commercial bank would consider it based on their metrics, and we all know the metrics that they're going to use coming in, they want to know net operating income of a cash flow deal. They want a capitalized rate or an LTV driven value or an appraisal, something that's going to value the deal. And then they want it to have a debt service coverage ratio of over 1.25. But what a lot of us don't know is there's a lot of carve outs in the cash flow dynamic that goes into that computation. So the software is written to take all that into consideration. And it allows us to have a conversation starter as the investor or developer in the property that we're considering. So it's a sanity check. So I use it now all the time. If anybody comes to me and says, I'd like you to invest in something. Let's take my adult children even for a moment who want me to invest in their business, right? Well, hang on a second. Take software and turn it green. Show me that it's investable by a commercial bank. Then I'll consider investing in you. You should see the stuff that's happening across the country in those worlds. But property is the same way. When we look at if we're going to buy a property, I can get in front of any property today on my mobile phone, open up my Commercial Loan Success app, get inside and vet the numbers provided to me by the seller or the realtor on the spot to determine if bank financing is likely to happen based on the asking price. Now I can say to the seller, I can only offer you this because this is all I can get from a bank. And if you want to argue with me, but argue with the software. I'm not making these numbers up. This is third-party software. This isn't my own software that we're using. This is online, available to all investors. So you have that. When you're a seller, you can defend yourself by saying, I know you can borrow this much against my Schedule 8. Right? So I know you can pay me, let's not retrade it less. I can do this for these numbers. And then as a regular passive or active investor, I'm always going to say to the sponsor, hey, show me how I fit in with the commercial bank side by side, or if it's a fully private investable deal, I want to see the full funding and I want to see how all of us fit in at whatever rate you've offered us. Show me that it would cover as if I was a commercial lender. Because why should I have different underwriting standards than a commercial lender? They're as strict as it gets.
Okay, and so just on that point, yeah, the underwriting criteria that we have. So, for instance, you with your family, if they're coming to you with a project that they would like to have you support them with, you probably as a private individual have different criteria than what a commercial lender might have. A lot of our listeners are private lenders themselves, and I understand that you have an application within your program for the lenders. Is that something that if, let's say that I have certain criteria that I want to plug into that, is that something that's adjustable to align with my lending criteria? So let's say it's our standard is 70% of completed value. We don't want to go higher than lending or investment of 70% of completed value. Or maybe the interest rates are different. Is that something that's adjustable for private lenders to use?
Absolutely. Everything inside of our Commercial and Success app is totally user-friendly. There's a resource center that will explain to you how to use every line item. And along the way, there's tooltips at every entry point that you can see. And to answer your question specifically, yes, you can change loan-to-value ratios. You can change interest rate. You can amortization terms, length of maturity. All of that stuff is all inputable for the commercial bank as well as you as the private lender. And just to give you a live example of how I use the software even today, I had a guy the other day send me a portfolio from across the country of units that he wanted. A woman was consolidating 10 single family homes. And he says to me in the email, here's the rent roll. And he says, so no expenses. Here's the rent roll. And he says she wants 1.6 million, but I've got it at 2.3 million. And I said, good, here's what you do. Go to commercialandsuccess.com, purchase the apartment screener. We have 3 different property screeners, one for rental properties, one for commercial property, and one for mixed use. So I said, buy the apartment screener, put in the rent roll, and then put in the expenses per unit, and then send me the result. And if I like it, then we'll consider investing in it. And he freaks out and he calls me because I'm emailing him this, and he calls me. He's like, I went to your site. I can't believe this software. This really does this. So it becomes a dynamic to change the conversation when we're asked to quickly vet deals. how he sent me a deal is how we all get it, right? Here's a property, here's what the thing is worth, here's what we think it's worth, here's the income expenses. Well, now show me the end result. Take it one step further. Show me a third-party vetting software on the deal so that we can now decide if we're going to continue the conversation together. It's a conversation starter, right?
Absolutely. And you shared earlier about the fact that you get like a one pager results. One of the things that happens in our company is we get maybe many days we can get a dozen deals in a day. And what tends to happen, I know this happens with us, it happens with other people, is the confusing, either the thick stack of submissions that come in, like let's say somebody submits a deal and they've got all kinds of attachments to it. That gets set aside. The ones that have no detail around them, they get set aside. The ones that have the right amount of detail, really have the meat on one page, those are the quickest and easiest for us to go through. So if you want to be on the top of the stack of the reviews and have a higher chance of getting to that review stage quicker by having that one page, very succinct, clear summary of what it is that you're looking for, that is something that we certainly appreciate when it comes to us. The other thing is that if we can show that it has the accuracy that we need to see, I mean, all of those things add up to it's more likely to be able to put a deal together, because we know that whoever has come to us is prepared. And the last thing I'll say on that is that I'm just finishing up a book, and it'll be coming out probably in about 5-6 weeks. And in one of the chapters, I talk about how to present your deal if you're an active investor, how to present that to the passive investor, the one with money, the one who is looking to partner up with you. How do you present that in a way that shows that passive investor that you've thought about all the risks, that you know your numbers, that you've taken the time to see everything through all the way to the end? And I can only imagine that this software would be an excellent addition to a submission package of any sort because of its clear, succinct summary of the project.
Absolutely. I mean, we have developers right now, and it's funny, just to back up, everything you just said is the same type of discussion that we've had with the commercial banks. I mean, the first place we started in beta with the software is we went to the brand name commercial banks that you would know and said, vet this so you're comfortable with the algorithm. And then they do, and then the testimonials come in. And you've got the bankers with the testimonials saying things to us like, the biggest problem they have is rejecting loans. And the statistics are staggering nationwide on commercial bank lending, where over half the submissions are rejected. And what the bankers will say is, we don't like to reject people. That's a relationship we don't get to continue now. And what we have is, we have most of the time an unrealistic expectation of a borrower, or we have a borrower that has an incomplete package coming to us. And what they like about the commercial loan success one sheet is it forces the borrower to speak their language in a very succinct way and to be more organized coming in. So for a fund like yours, for a commercial bank, it's the same dynamic. And when we speak to that passive investor and we say, once we built the relationship that we should have between us and them as the sponsor, and we send them a one sheet, and we simply say to them, it's a good deal for the bank. That means it's a good deal for you if you're interested. And here's how you fit in. And here's what the coverage ratios are with you and the bank, or with just you in the deal. And it shows them that we've thought through not only how to service them if they're on a payout or an accrual basis, but also what is the exit? What's going to happen upon exit, so that they know that they can get out of this thing. And I love what you just said about a 70% LTV, because you're giving people the market room to move and not erode anybody's principal, which is a fantastic metric that you would put right into the software, and you'd send to a passive investor and you would say, I've put in the following metrics: 70% LTV, the interest rate we're paying you, the term we're giving you, whether you're accrual or whether you're being paid monthly or quarterly or however you're being paid, and it all works according to the software.
And this software is set up for multifamily. It's set up for storage units. It's set up for residential. The entire array of different types of properties and business. Is that correct?
So people use it. It's primarily set up for commercial, which means in the rental property space, the regulations in the carve-outs and the DSCR work when you have 5 units or more as part of a residential package.
DSCR meaning debt coverage ratio.
Exactly. So when you get into mixed use, you can have one commercial unit and one residential unit. By definition, you have a mixed use property. And when you get into commercial, you can have a strip mall with 2 or 3 units and you still have a strip mall or a strip property. So when you look at the residential part, it still makes perfect logical sense to vet a transaction if you're going to hold it, to show that you have enough rent coming in to cover the mortgage and all the expenses. The smaller the property, the harder it is to cover. So there still is some reality to the equity in a residential house having a lot to do with the internal rate of return. But that's legacy software. That's the stuff we all have on our computers that we can buy other places, that the commercial realtors use, that we all use to determine all those fancy things I learned in finance class, right? The internal rates of return, cash on cash, all that fun stuff. But our software is designed to be very simple in what it's trying to answer at the point of conversation. Is the first mortgage or is the second mortgage or third mortgage, are the mortgages financeable on the property? Yes, no. Stop, go. If it's a stop, why is it a stop? Maybe rents are too low, maybe expenses are too high. If it's a go, good. That means that the commercial bank would likely to consider it. So as the investor, I should take a hard look, and you and I can open up CoStar, LoopNet, whatever we want, and we can vet 10 deals today in a matter of 20 minutes.
So again, this can be used, it's ideal for not only the active investor with the deal, but also the passive investor or the private lender who might be looking at deals to vet them and to see that they are good, solid deals.
And it's being used in the CPA community now to be able to communicate with those of us who use those transactions, who are in that transaction space, to help us place financing. It's being used in commercial real estate space, where the commercial realtors see a tremendous amount of value in the mobile part of being able to have the conversation right on site at the first meeting with the realtor as to whether or not it's a viable listing for them, and what the purchase price or asking price should be, and is it fair? And why not, as investors, why wouldn't we sanity check everything we do the same way? Let's sanity check deals through the kaleidoscope of, today I am a commercial banker. Would I do the deal? Because let's face it, the most conservative investors on the planet are still the commercial bank.
Yeah. And when you, as let's say you're the borrower or the developer, and you have the confidence of the numbers behind you when you're talking with the passive investor or the bank or someone who's potentially going to be the money partner in the transaction, when you go in with that confidence of knowing that your numbers are solid, that's going to show through as well. And that's another element to the success of getting your deals funded, is going in with that confidence, going in with the assurance that you know what you're talking about.
There is absolutely, if you are in the transaction space that you and I are in, and the people that are on the call are in, there is no reason anymore to have anything between nervous and dread in the capital raising process, be it with a commercial bank, be it with a private lender. What you need to do is sanity check your transaction, make sure your numbers are a go, and then you are empowered. I mean, the testimonials coming on the software from small investors doing the $200,000 and $300,000 transactions. One young man just sent us a thing. He walked into the commercial bank, sat down on the table, and we tell them what to do. And he takes his one sheet, he puts it on the table, and he says, "I've bought this third-party software to vet my transaction against common commercial bank guidelines. Would you like to take a look at it and continue the conversation with me on the property?" Kid delivered it to a T. The banker is in one of those buildings where the bank's up downstairs and the commercial lending team is upstairs. Banker looks at it, and he's a VP, and he asks him if he could just wait a moment, please. He goes upstairs. He brings down the senior vice president of lending. So the kid's sitting there and he's like, I'm going to put my feet on the desk now. I feel pretty good here. I got the bank VP, I got the senior VP, and everybody suddenly wants my loan. So the kid's like, maybe I should start to talk rate. It's like,
Wow.
don't overdo it. Don't overdo it. But, and then they end up doing his transaction. And they tell him he's one of the most prepared borrowers that they'd seen. Now, he came in with one piece of paper, Tom. He didn't come in with it. What happens to all of us in the past, right? We would put together to go to the bank a nice book. We'd have all of our executive summary, pretty pictures, everything in there. We'd walk in a bank, we'd put it on their desk, or we send it digitally. And what happens? We wait.
Yes, it's
right. And it's going to take how long? 7, 10 days before we get an answer. And there we sit. Now, what happens? Multiple offers come in. We got a seller who wants verification that the bank's in the deal. I can go on, right? Now, no more. I want to know from the bank up front, are we continuing the conversation? If yes, email me that if the transaction is verified as sent, you will take the loan to application. That's all I need to show a seller, hey, we're in the deal. And I can do that in 5 minutes.
So if our listeners would like to know more information about this software and what the opportunities might be, I know on your website you have tutorials, or you have would you call them tutorials or explanations?
Yeah, tutorials, yeah. Yep.
Mm-hmm. And
yep.
So how would you suggest that people check out what you have?
Oh, it's real easy. So you go to commercialloansuccess.com and you just start there. There's videos, there's demos. As you get inside and as you get involved in the software on the pricing page, we have a resource center that's got robust education in it for how to use the software and how to apply it as an investor or as a developer or passive aggressive investor in terms of your property business or just your business lending. But you can also go, we put together for your podcast today at web.commercialloansuccess.com/bank free. So one word, web.commercialloansuccess.com/bank free, a free giveaway for everyone who will sit there and watch me and listen. I got to give them something for putting them through that today. So you go there and it's chapter 2 of our upcoming book, which is how to have commercial loan success in your property investing or business. And we also give you a link to the software at a nice discount.
Great. That's excellent. Appreciate you doing that. And so this is an exciting software. I'm definitely looking at getting more information on it myself, and look forward to potentially working together on it in the future. So one of the questions I asked you before we got on this recording was, I like to have the guest give the last word. So my question for you right now, before we part, is what is the one thing that the one piece of advice you would give to listeners who either are starting out as the active investor or maybe they are the passive investor with money? What is the one thing that from all the years of experience you've had that you would give for advice?
Sure. I mean, great question. And, if I'm an active investor today, I want to get my financing boogeyman taken care of before I spend a lot of money on due diligence, right? So I'm going to want to know the numbers qualify before I apply. That's an easy one. If I'm a passive investor, I want to know where my exit is. And I definitely want to know the deal is fully funded. One of the things that can create a lot of havoc is, as you know, in sponsorship for larger commercial transactions is not having enough funding on what otherwise is a terrific deal. So if I'm being asked to put in a fraction of a transaction, I want to make sure all the rest of the fractions are in, that the transaction's fully funded. I even like to see a little reserve in there for a rainy day. And I would want to make sure that that sponsor has accounted for every single nickel that needed for the deal and then some, because that's how you know it's going to have a chance for success. If you only bring part of the money to the table, it only creates problems in the deal. And then as a passive investor, you're not set up to step in and take over. It's the last thing you want to do. So you want to make sure that the deal is fully funded.
Great. Well, thank you, John. It's been a pleasure, and I look forward to connecting with you next time.
Thank you, Tom.